Which are the stocks on the editor's radar? Interesting names that we've picked out today. Mankind Pharma, the cynosure of all eyes today, and it is a well-established company as well. We are all looking forward to the listing, and all experts are saying that it is going to be at a healthy premium this time around, given the kind of grey market action. Macquarie as well said that it's well-positioned to double its profit by FY26.
You're going to introduce the company and say, okay, a pharma company, but it's a pharma company which gets more than 97% of its revenue from the domestic market. So it's a pharma company which gets almost its entire cash flow from the Indian market. Now that's the differentiating factor. Why is that a differentiating factor? Because if you look at any of the other Indian pharma companies, whether it is Sun Pharma, even a domestic focused company like Cipla, they don't get more than 40% of their total business actually from the domestic market. That data point will just come up on your screen. That's part one of the story. Part two of the story, if you're a domestic focused pharma company, there you go, that's the number which tells you that Mankind gets 97 and Cipla and Lupin don't even get 50. Torrent, which is a slightly higher in terms of market share, but 50% is still non-India. This, I think, is a differentiating factor. This means that there will be visibility in the numbers and cyclicality would not be there. Unlike the US generic market, in India, the drug price trends are not always very volatile. Second, the return ratios, I think, are very decent, whether you look at return on equity or cash flow generation. That means it will command a strong P multiple, which will be certainly higher than a Sun Pharma and a Lupin, which means it will be trading at the higher end of the P multiple. So then what is the comparison? I don't think it will command as a P multiple which is as strong as MNC pharma companies, but it would be a discount to that. So you bake in that discount and you say, where can the stock open? I think a 10 to 15% appreciation and maybe some follow-up buying for Mankind Pharma after that cannot be ruled out. Which is the growth market in the world? It is India. Why is it growing? Because Indians are addressing their needs because per capita is going higher. So we are buying branded apparel, branded watches. We're spending more in terms of healthcare, and they have a strong presence in the chronic care, which is where I think the advantage for Mankind Pharma would be. So I'm not using superlatives to describe Mankind Pharma, but I genuinely feel that this really could be the listing of the season.
Listing of the season, okay, that's Nikunj's word. Return ratios looking favorable, as well as the P ratio, all of that working well, and of course the domestic business. Let's move right on then. It's interesting because we've been talking about the food delivery space and of course the two dominant players, Zomato as well as Swiggy. And it's interesting in terms of the kind of market share that they hold and the fact that they, in terms of their peak valuation as well, they've come off.
Okay, you must just remember that there is a very big difference in Swiggy and Zomato. Of course, they both deliver food, so that's not the difference. The difference is Swiggy is not listed and Zomato is listed. Since Zomato is listed, it is an auction market where prices changes on a daily basis. From the peak valuation, Zomato has come down from about $15 billion to the current valuation of about $6 billion. For Swiggy, what Zomato, because it's listed, the price discovery happens on a daily basis. For Swiggy, it is happening only when the existing investors or an external valuer, they come out and change the entire underlying valuation. So what Zomato has experienced 6 months ago, Swiggy now seems to be experiencing now. That's a very big difference. Yeah. So for those who are thinking that, Swiggy's valuation has come down and it's going to have impact on Zomato, no. Second, it is also important for us to understand that since this is the buzzword right now, ONDC and I'm getting my burger and pizza at the 50% discount, these are very early days. While I'm not undermining the impact of ONDC, it's a great idea and it is a platform which will have a great impact in terms of how e-commerce in India would be done. But for me to imagine that right now they would be in challenger, but to imagine that they could be changing the food delivery business in a disruptive manner, it's too early. I mean, imagine a restaurant. You can only focus on micro deliveries. You will have to invest in personnel. You will have to buy two-wheelers. You will have to get into more HR ka management jhanjat. Do you really want to invest in that? I think it would be a bit of a struggle. So I think that is an evolving process and it could take a couple of years before we realize that how the food delivery dynamics would change. So to cut a long story short, Swiggy impact, zero. ONDC, I think is work in progress.
Yeah, so it's too early to tell. So that's interesting, Aisha, as we flagged off these two stocks on